Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
Hey, everyone.
Today, we're going to dive into a few really interesting things. There's this new Bitcoin company with some, well, familiar backers. Then there's a big push, a new VC fund, actually, looking at rebuilding U.S. industry. Think infrastructure, robotics.
Yeah, really foundational stuff.
Exactly. And, of course, we can't ignore the latest from Tesla and Intel. Lots happening there.
Always.
So, yeah, we're going to try and cut through the noise, give you the key takeaways, maybe spark a few thoughts.
Sounds good. Let's do it.
Okay, first up, 21. This new Bitcoin firm, Jack from Strike is behind it, and you've got Cantor Fitzgerald, Tether, maybe SoftBank involved too. What's the deal here? It sounds different.
It really does. The core idea, they're calling it a pure Bitcoin business. So unlike, other companies that maybe buy some Bitcoin.
Right, like a side thing.
Exactly. 21 is only about building Bitcoin products. And this is key. They want to grow the actual amount of Bitcoin they hold per share. That's their main goal for investors.
So not just hoping the price goes up, they're trying to accumulate more Bitcoin for each share.
Precisely. Jack apparently made the point that lots of companies are just like pivoting, selling their old stuff, and just buying Bitcoin.
Yeah.
21 is built for Bitcoin from the ground up. They even have these new metrics, BPI.
Bitcoin per share, yeah. That's the one they want to increase. And BRR, Bitcoin return rate. It's like they want you thinking in Satoshis, not dollars.
It's a whole different mindset. Think about comparing it to a Bitcoin ETF.
Okay.
An ETF just gives you exposure to whatever Bitcoin it holds, right? Pretty static exposure per share.
Right, you buy a share, you get a tiny slice of their fixed pile of Bitcoin.
But 21 says, no, we're going to actively work to increase our Bitcoin holdings. So theoretically, your share represents a growing amount of Bitcoin over time.
Interesting. So it's more active management, trying to outperform just holding Bitcoin.
Yeah, which obviously adds another layer of, risk and potential reward.
Yeah.
It depends on them actually building successful businesses using Bitcoin.
And Jack's still running Strike, too, apparently.
Yep, CEO of both.
And Strike, I saw some numbers. Pretty impressive, like over 20% margin, 85% gross profit with only 75 people.
Wow, yeah. That's incredibly lean. It does suggest he knows how to run a tight ship in this space.
Definitely adds some credibility. So the plan for 21 is raise money, buy Bitcoin.
Acquire more Bitcoin.
And eventually get listed. Ticker XXI, they hope. The whole point is, and I think this was a quote, to help shareholders get wealthier in Bitcoin terms.
That's the bottom line. It's a bold bet, banking everything on Bitcoin's future and their ability to grow within that ecosystem.
What do you see as the biggest hurdle? Or maybe the biggest upside?
Well, the upside is obvious if Bitcoin takes off and they execute well, potentially huge returns measured in Bitcoin. The hurdle, Bitcoin's volatility, for one. And just, execution risk. Building this new kind of company isn't easy.
Makes sense. Okay, let's shift gears. From digital gold to, actual steel and concrete.
Right. Rebuilding American industry.
Yeah, there's this new VC firm. And the names behind it are, Fred Wilson from Union Square Ventures.
A legend in tech VC.
And Gwynne Shotwell from SpaceX.
Yeah, that's a powerhouse combination. Tech and heavy industry expertise.
It signals something important, doesn't it? That focus on U.S. infrastructure and industry. It feels timely.
It feels critical, honestly. It's about the economy, sure, but it's also clearly about national security now. You see that framing more and more.
And look where they're investing. Digital infrastructure, robotics, AI, compute. All the big trends are hitting these areas.
Absolutely. AI needs massive compute, which needs power and data centers. Reshoring manufacturing needs robotics and AI to be competitive. Electrification ties into it all. It's all interconnected.
They're not just writing checks either, are they? Mentioned co-founding companies, too.
Right. Primarily investing, backing founders, but also starting things themselves if they have a strong idea and partner. Like their first one, a nuclear developer.
Yeah. Fleet-scale nuclear. To power AI data centers and factories, that's ambitious.
That's swinging for the fences. It says a lot about their long-term view and willingness to tackle really hard, fundamental problems like energy.
Because energy is going to be a huge bottleneck for AI, right?
Potentially, yes. And manufacturing has always struggled with U.S. labor costs compared to overseas.
So the bet is robotics, and AI can bridge that gap, make made in the USA actually work financially.
That seems to be a core part of the thesis, finding those innovations that make domestic production viable, even preferable.
And you mentioned something about how these kinds of businesses can scale. using different kinds of capital, not just equity.
Yeah, non-dilutive capital. Think asset financing you borrow against the factory or the robots, or
Yeah.
debt based on contracts. It's different from tech startups constantly selling off pieces of the company.
Right, so potentially more sustainable growth without diluting the founders and early investors as much.
Exactly. It's common in infrastructure and industrial sectors.
Okay, let's talk Tesla. Always a roller coaster. They missed earnings, but the stock went up after the call. What happened there?
It seems like one specific thing overshadowed the numbers. Elon Musk said he's cutting back time spent on Doge, which he clarified meant government projects, not the coin.
Okay, good clarification.
And spending more time focused squarely on Tesla starting in May. Investors apparently loved that.
Like, dad's coming home?
Sort of. Like a signal of renewed focus on the core business, on innovation, on self-driving. It clearly boosted confidence enough to ignore the earnings miss.
But wasn't there a bit of like a mixed message? Musk saying macro factors aren't hurting demand, but the CFO mentioning brand and politics are having an impact.
Yeah, that caught my ear too. It does sound a bit contradictory, but maybe they're both true. Like, overall EV demand is strong, but Tesla's specific share might be affected by brand perception in some areas or among some groups.
Could be. We actually heard from a retail investor based in Santa Barbara.
Oh yeah, what do they say?
Said they're not really seeing major brand damage there. Still lots of Teslas, even seeing new types of buyers considering them, despite, protests or negative headlines sometimes.
Interesting, a ground level view.
Yeah, and they also made the point that launching the Model Y successfully across multiple factories shows the team is strong, regardless of Elon's focus level day to day.
That's a fair point. Operational capability is huge.
And speaking of focus, full self-driving. Musk apparently gave an updated timeline. Significant revenue by mid-2026.
Mid-2026. Yeah, that's still pretty soon considering the challenges.
Ambitious, right? Especially compared to, say, Waymo.
Well, yeah, this investor you mentioned apparently brought that up too.
They did. Pointed out Waymo is super expensive, geofenced.
Right, limited operating areas.
Whereas Tesla's trying to make it work everywhere using data from all their cars. It's a different approach. Longer path, maybe, but potentially much bigger scale if they crack it.
It's the fundamental difference. Scalability versus controlled environment. We'll see who gets there, or gets some more useful first.
Okay, last one. Intel. Sounds like big changes are coming. Reports of cutting over 20% of staff.
Yeah, a major restructuring under the new CEO. The word is the old structure was bloated. Decision-making was slow.
Needs a shakeup to get competitive again.
Seems like it. Especially because, well, let's be honest, in the AI chip space.
They kind of missed the boat. Compared to NVIDIA?
That's the general view, yeah. They've largely lost that game for now. So the pressure is immense to nail the manufacturing side. Catch up to TSMC.
That has to be priority number one, right? Get the foundries competitive.
Manufacturing prowess is their potential advantage if they can execute.
What about the Chi-Chi-PS Act money? Is that uncertainty holding them back? I heard some say lack of funding isn't really the core problem.
Yeah, it's complex. The funding helps, obviously, with building fabs in the U.S., but the core issues seem more about internal strategy, technology roadmaps, and execution. They still outsource manufacturing to TSMC for some key chips, remember?
Right. So government money helps, but it doesn't fix underlying competitive issues on its own.
Exactly. They need to get their own house in order, technologically speaking.
So looking across all this broader market feeling, seems like maybe expectations were so low this quarter, some companies might get a pass.
Could be. A bit of a better-than-feared reaction in some cases. But there's still tons of uncertainty. Look at Vertiv factoring in full tariff impacts already. That's cautious.
Yeah, it tells you businesses are genuinely worried. And the feeling is, if tariffs really ramp up,
then a recession becomes much more likely. It's a real risk.
But maybe a soft landing is still possible if things don't escalate too badly.
Hope springs eternal. A path to modest growth exists, but it depends heavily on trade policies and just geopolitical stability, really. We're kind of watching and waiting.
Definitely feels that way. Okay, that brings us to the end of this deep dive.
Lots to think about there.
For sure. Well, thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, please do like, comment, share it around, and subscribe for more tech chats.
Yeah, let us know what you think.
It's clear, isn't it? From new Bitcoin angles to rethinking American industry to the ongoing drama with Tesla and Intel, the pace just doesn't let up. We hope this helped make sense of some key moves. What are your thoughts? Is 21's Bitcoin strategy genius or too risky? Can the U.S. really bring manufacturing back at scale? Drop your thoughts in the comments.
We'd love to hear them. See you next time.